So we're very fortunate to be joined by Melissa Bouffard, who is a partner and chief financial officer from Baker Tilly. So since being with Baker Tilly in 2016, Melissa oversees financial, strategic, and operational initiatives along with assisting clients with their advisory, accounting, and tax needs. She delivers strategic financial leadership that helps businesses optimize performance, drive sustainable growth, and as well as assisting clients with their accounting and tax related matters. So with that being said, I do want to flip it over to Melissa, and I'm sure she'll do another introduction and yeah, tell us more about smart tax moves for businesses.
Wonderful. Thank you so much, Caitlin. Good afternoon, everyone. As Caitlin mentioned, my name's Melissa, and I am a partner here at Baker Tilly. I've been a partner for a couple of years now, and I've been, as Caitlin mentioned, with Baker Tilly from 2016. Before that, I was at another firm in Toronto, and I've also actually worked in the private sector as well. So I come with a bit of a unique background in that I have the technical tax and accounting down pat, but I also have some real world experience, which, I can add value to my clients and people such as you to help kind of bring your business to where you're trying to take it. So what I am going, I actually see a couple people I know have joined the call, so hello out there. Okay, so I'm going to share my screen. Caitlin, can you just let me know that if you could see
Yeah,
it?
we can see that one. Yes.
Okay, perfect. So I'm going to take you through, I'll just pop up the agenda. I'm going to take you through a couple of different items. I would say at a high level, because the devil's in the details or some of these things, but my goal here today is to give you some things to think about as you're considering taking your business to the next level. Maybe not come out with all the answers, but definitely have some takeaways and things that you might want to talk to your advisor about, or talk to someone else about later, me or anyone else. So I'll first take you through different business structures, then I'll go through some record keeping best practices. I'll cover some CRA filing deadlines, employer responsibilities if you have employees, HST responsibilities, just some general overview on revenue and business expenses, and then just how to prepare for your tax season. So when we talk about starting a new business, often people jump to, I need to get a corporation, which is sometimes the right answer, but does come at a bit of a higher cost than running something as a sole proprietor. So you have a couple options that I put on the screen. So the first thing is a sole proprietor. So that's an unincorporated business. So you still operate as a business, you still have a business number, and all those things. However, you don't have an actual corporation. So it is a bit simpler. It's lower cost to get it set up, but it is linked completely to you personally. So one of the benefits of a corporation is you can shelter yourself from some liability, whether it's from creditors or just business risk altogether. So that's a conversation that I always recommend you include your lawyer and your accountant in on. Is there any other reasons outside of tax that you should maybe incorporate to protect yourself in other ways? The other thing to know about a sole proprietorship is that it's all taxed on your personal tax return. So that means you have no ability to defer personal taxes, even if you're not using the money. It's all taxed in the year it's earned. The next is a partnership, maybe a bit less common, I would say, but it's in essence where it is another entity where one or more individuals get together. That income, so any money you earn, is not taxed in a partnership. It is flowed out to you personally, similarly to a sole proprietorship, or if you have a corporation, it could flow to the corporation. I'm not going to touch too much on that. I think that probably you guys are not considering setting up a formal partnership. Often you have informal partnerships set up, but I don't think that's kind of something that's going to be overly relevant on this call. And then the last one I have up there is a corporation. So that is another entity separate from yourself that you would incorporate with a lawyer. And there is some tax planning opportunities in that if you aren't spending all the money that your business is earning, if you don't need it all personally to live, you can get some deferral on some higher tax rates, because a small Canadian business does pay 12.5% tax up to a certain amount of money. So it is a very favorable tax rate. And if you don't need the money to live off of, you can leave it in your corporation, and kind of have that money work for you. So again, what the right decision is for you is really dependent on your personal situation, how much money your business is going to make, and also how much money you need to live off of. So that's a conversation that you should be having with your trusted advisors. And then again, looping in the lawyers to make sure there's no other risks that might be mitigated by a corporation. I also should mention, I am happy for anyone to put any questions in the chat as I go. I'm happy to answer them section by section or at the end, or you can always follow up with me after, whatever you prefer, but you can interrupt me or put in questions. Now I'm going to take you through at a high level about record keeping kind of best practices and maybe some technology that can help you. So you are required to keep all business records for 6 years after the tax year that you're talking about. So when I say records, that means not only just your accounting software or the Excel document that you've been recording your transactions in, but also the underlying data. So copy of invoices, copy of receipts, all those kind of things must be kept. The CRA has the ability to audit you whenever they want. There is a statutory period that which is 3 years, that they technically can't go back for, but they can find reasons to open up even those other years. So good record keeping is very important. If they ask, they typically don't give you much time to provide all the information that they're asking for. And so having yourself organized makes that a lot easier. Today, many people keep electronic records, which is fine. There are requirements with the CRA to keep those records stored in Canada. They have to be accessible, they have to be backed up, and all those things. Many tools, QBO, Xero, actually allow you to upload the backups right into there. So that makes it very, very easy for everyone. With respect to bookkeeping, I do recommend that you keep your bookkeeping up to date. Of course, it makes it easier at the year end when you're trying to give your information to your accountant or do your taxes, but also from your own business. It's really hard to have insight into your business if you don't have a good idea of what your revenue is and what your expenses are. Obviously, your cash balance can give you some indication of what's going on there, but you want to make sure you're keeping track of unpaid receivables or vendors who you owe money to. Helps you manage your cash flow and just know how your business is doing on a daily basis. There are tools, lots of kind of cloud-based solutions now. I have a couple examples up here: QuickBooks Online, Xero, fairly inexpensive tools to help you pretty seamlessly do your bookkeeping. They connect directly to your banks. So they basically take all your transactions in your bank account and put it in the system, and then you record it to the right category. It's very user-friendly. And so those are always things that we recommend for our clients. They also have a lot of apps attached to them that you can take pictures of receipts and it'll automatically do the journal entry for you, and then you can just review it. And then if that's all too much for you, of course, you can always get your you can always outsource your bookkeeping. And that really depends on how complicated it is, how much you understand it, and how much time you have. I do always tell my clients, your time is almost always better spent focusing on growing your business than doing the accounting and tax work of your business. But that's ultimately your decision, as I know cash for new entrepreneurs can be tight. And so you're trying to manage where your cash outflows are. The last point I have there is just, if you don't keep proper records and you do get a CRA audit, the CRA will deny any deductions where you can't provide proof of. They don't take your word for it. They do want to see proof. And so if you can't support a deduction that you did for a vehicle, and we'll get into that a little bit later, they will deny that deduction. The last point I want to make on record keeping is some of you are potentially starting quite small businesses. Excel is still a simple tool that you can use if you have very limited transactions. So if you're only doing a couple of transactions a month and maybe the cost of a QuickBooks Online or a Xero seems a bit pricey for you, you can use a basic Excel. All I recommend is that you also then have some sort of folder system where you're actually filing the supporting documentation and that you are still reconciling your bank account on a monthly basis to make sure you're not missing anything. So I'm not saying you always have to use a QuickBooks Online or a Xero, but they are pretty inexpensive. But Excel will still work if you have a low volume of transactions. So next, I'm just going to highlight some of the key filing deadlines that you should be aware of as you're starting your businesses. So sole proprietor, so if you recall, that's an unincorporated business that you file with your personal tax return. Those tax returns are due on June 15th. So a bit of an extension from a regular T4 employee. However, you do still owe the tax amount by April 30th to avoid interest. So just keep that in mind. If you do decide to go with a corporation, likely you'd have an accountant in this place and they would handle all your deadlines, but they are due 6 months after year end, and you do owe taxes 2 or 3 months after year end, depending on the size of your business. We'll get into kind of employer obligations next, but if you do have employees, you do have to remit to the CRA certain remittances, CPP, and income taxes on a regular basis. And that just depends on when you process your payroll. Know that if you miss payments, if you miss filings, there's penalties. And if you're late on your payments, there's interest. And so keep that in mind because the CRA interest rate is, I believe, I haven't checked it, but I believe it's sitting at 7%. That interest is not deductible. So it's quite punitive if you do have to pay it. Little bit about installments, just some basics here. Installments are what the government requires you to, in essence, prepay your taxes so that at the end of the year, you're not owing a large amount of money. And so there's a lot of different installment rules, but on the individual / unincorporated business, if you owe over $3,000, you're required to make installments quarterly, and the CRA will send you a schedule of when they want the money and how much they want. If it's a corporation, there's a couple different methods that you can use to calculate it. Again, your accountant will provide you with those installments. And it's either quarterly or monthly that you are required to remit it. And then what it basically does is it's an estimate of what your tax is going to be. And then at the end of the year, when you actually calculate your taxes, you'll be required to either remit the difference or you will get a refund. So I'm going to touch a little bit about employer responsibilities. So if any of you are looking to hire people or go on payroll yourself as a way to pay yourself, there are some things you should think about. You do need to register for a payroll account with the CRA. And you do, as I mentioned, have to deduct CPP, EI, and income taxes from your wages. So there's lots of tools. There's providers like Desjardins, ADP, WagePoint, who actually will do all this for you, or then you could also use QuickBooks Online. Lots of different easy ways to keep you compliant on the payroll side. So as I mentioned, you do have to remit that on a regular basis. And when the remittances are required really depends on your payroll, but commonly it's the 15th of the month. At the end of the year, you are required to do T4 slips for any employees that you have, including yourself. And those are due by the end of February. And again, just highlighting again, especially for payroll remittances, there are big penalties if those are late. So if you're going to remember to do anything, it's your payroll remittances. So I do recommend that if you're not comfortable with it, then you speak to someone who is able to help you with that. When we look at GST, HST, HST for the most part for those on this call. So your magic number at the highest level is 30,000. So if you have had $30,000 in sales in the last 4 quarters, you are required to register and start charging HST. So that's kind of the magic number that we always tell people. Give us a call when you're approaching that number, and we can work through that. You do have to register for HST when you hit this threshold, and then you are required to then remit that to the government. You are also able to get something called an input tax credit, and what that is that if you pay HST on any expenses for your business, you do get that back. So it's an in and an out model. And so once you hit that threshold, you will want to start charging HST, because then what happens if you miss that mark and the CRA catches you, then you're in a bit of a pickle where you either have to go back to your clients and tell them that you made a mistake, or you're coughing up the money, and that's not a great situation to be in. So again, at the highest level, keep that $30,000 in your mind. I do have a note on here that depending on what your business is, there are some zero rated or exempt supplies that don't have HST applicable to them. Again, that really depends on your business. And so, the CRA website does have a lot of information about that, or any expert would be able to tell you if you have to charge HST or not. But I think the safe assumption is you will have to charge it unless you're in one of those exceptions. So not to be, I won't take too much time here, but I just want to give you a bit of a high level on, what the government is taxing you on, and what kind of your business income statement is made up of. So revenue is any sale that you make. So there's no cash deals in the government's eyes. Everything needs to be reported to them. And so that's what constitutes your revenue. So any sale you make, whether for a good or service or anything else, will be reported as revenue. And again, how you report it, whether it's on your personal tax return, on a form called the 2125, or in your corporation, depends on how you're structured. What I've outlined here is some of the common expenses that we often see in our small businesses. Couple things I'll touch on. So if you are operating out of your home, you do have the ability to deduct a pro rata portion of your household expenses to offset your revenue, because you did incur those costs to earn revenue. We typically do a square footage calculation. So if your office is 10% of the home, you can claim 10% of the home office expenses. And again, there's some expenses that are like your hydro, your utilities, your internet, all those things are deductible. Any rent that you might be paying, property taxes, etc. With respect to your vehicle, if you're using a vehicle for your business, you are able to deduct the portion that I'm going to assume you own this vehicle personally, but you are able to deduct in your business the pro rata share that you use your business for, use your vehicle for business. So gas, repairs and maintenance, all of those things, a proportion of your lease payment. If you do own the vehicle, there's something called a capital cost allowance that you're actually able to deduct. So if you are using your vehicle for business, the most important thing is you do need to keep a log. The CRA, if they audit you, will ask you for a log to come up with your business kilometers. So if you say my total kilometers for the vehicle were 40,000 for the year, and I drove 10,000 for work, they're going to want you to support how those 10,000 kilometers were come up with. So I always recommend a simple log in Excel, purpose, date, and kilometers driven. That's what they will ask for. Meals and entertainment are deductible when linked to business activities. However, they are only deductible at 50%. Other things, as I mentioned here, office supplies, softwares for your business, travel related to business, insurance, interest and bank charges, any advertising, professional service. So any expense that is incurred to earn business income is deductible. I haven't got into here if you buy equipment for your business. That is a bit different. Let's say you buy a piece of equipment, that is not all deductible in 1 year. So if it's a $30,000 piece of machinery, that actually does not get expensed all in one year. It gets capitalized, so put on your balance sheet, and then a little bit of that is expensed every year, depending on what type of equipment it is. All right. Not knowing fully, of course, what all the businesses you guys are trying to explore, I wanted to mention that a couple of tax credits and incentives for small businesses. So I mentioned at the beginning that if you do incorporate a Canadian controlled corporation in Canada who makes under $500,000 does get a reduced tax rate. And it is a regular tax rate, 26.5, and it's 12.5. So it is quite beneficial for that first $500,000 that you make. There are other credits that you can get. I've mentioned some of them here. This is not an exhaustive list, but the scientific research and development tax credit is one that you can use if you're doing research and development in your business, and it helps offset the cost of really wages. That's a big one. There are other costs that go through it, but most of our clients experience a lot of wage expense, whether it's their own wages for doing research onto a certain product, or if they're starting to develop a piece of software, let's say. So that's something to look into if you think that you are doing anything kind of scientific research and development. If you're a professional, I don't know if we have any professionals, but oftentimes doctors, psychiatrists, psychologists, etc., if they are doing research and development for different matters, they could actually tap into this. So it's not always just for someone developing a piece of software. There's, excuse me, there's also apprenticeship and training credits. There's also summer job credits that can help you offset some of wages for hiring new up and comers in the different industries. And then NOHFC is our Northern Ontario Heritage Fund, and they do offer, and they have many different programs for new businesses to access grants and loans to help grow your business in Northern Ontario or start a new innovative business. There are different criterias on what qualifies and what doesn't. We do a lot of work both in the shred space and the NOHFC space. So if you do think there's anything that might be able to help you, feel free to reach out and we can have a conversation. Okay, so just a little bit about preparing kind of for tax season. Some of this I've already covered. Consistent bookkeeping, so making sure that you are staying on top of your books and records. If you are using an accountant, if the business is small enough, sometimes we get our clients' books at the end of the year and we'll just do them all at once. But if you're an operating business with a decent volume of transactions, it is a good idea, like I mentioned, for both your benefit and your bookkeeper or accountant, is to keep up to date with your records throughout the year. Using an accounting software when it makes sense to streamline tasks, reduce errors, and just make sure things are recorded as they should be. Consult with professionals. If you're ever feeling uncomfortable or unsure, there's lots of excellent professionals here in Sudbury who would be more than willing to help answer some of these questions, whether it's on the bookkeeping side or the tax side or the accounting side, or the law side. I think the legal side is always something that can somewhat be overlooked when you are a small business, but you do want to make sure you're not exposing yourself. You've worked hard to be where you are today, and you'd hate to do a misstep now because of something you didn't know that could expose you down the road. And then kind of last but not least, I want to just talk a little bit about audits. I did mention at the beginning, but if you're filing things late or filing things with errors, those are triggers for CRA audits. CRA does go through, they will focus on different aspects of business where they see risks or they're seeing a lot of something in a given year. But there's no doubt about it that being non-compliant is a red flag to get yourself looked at by the CRA. And so if you, again, to avoid that, make sure you're doing things properly and doing them properly the first time and on time. Oh, my slide wasn't there twice. Okay, so last thing I wanted to leave you with, a couple just like best practices and also some guidance for anyone who is not incorporating. So therefore, you're not going to have a corporation with a corporate bank account, I still do recommend you open a separate business bank account. So oftentimes you'll see new entrepreneurs run everything through their personal account. If the CRA that's a record keeping nightmare trying to decipher what's business and what's personal. But if the CRA does choose to come in and look at your books and everything's running through your personal account, that makes the CRA investigation 100 times more complicated, because they will look at any revenue that's come into your bank account, e-transfer from a friend, gift from your parent, whatever it might be, and they will want to understand why that isn't taxable revenue. So my biggest thing with new businesses is open a separate bank account for all your cash flows of your business to go through. You can move money into that bank account if you have to fund some of the business operations. That's not a problem, but I do think you should keep them separate. There is a link in here, which I can circulate after, which does the CRA does have guidance for new businesses, and that them, along with obviously the support you receive from the Regional Business Center and all our other community partners who do a wonderful job of making sure that our new entrepreneurs are well taken care of. There is a lot of research out there that you can do yourself, even to just have a base knowledge. But like I said, the devil is in the details. And so if you're ever to the point where you're feeling uncomfortable, that is the time to bring in a professional. So that is all for my presentation. Now, I don't see any questions, but I don't know if that's because I can't see them or not.
Yeah, there hasn't been any questions asked throughout the presentation, but just to turn it over to anyone, if anyone has any questions that they wanted Melissa to address, I know your microphones and cameras are disabled, so please feel free to use the chat function, or there's also the Q&A as well, and we can take a look at those. I know small business tax is a topic on everyone's agenda. But I guess I can start off by asking the question, and you briefly touched on this, but
Sure.
I know not everyone is in a position when they first start out to work with an accountant or a bookkeeper.
Yeah.
So what would your piece of advice be for someone who's starting out and who may not have the funds in terms of setting up their books for success?
Yeah, so I would say at that point, then you're not going to obviously look to do a corporation, because I don't think I would recommend anyone do their own corporate taxes. So what I would recommend is keep good books and records, because at the end of the year, if you're going to do your own tax return, you are going to need to know how to fill out, Schedule 2125, which is your business statement. You're going to need to report all of that income. And you want to make sure not only that you report all the income, but that you aren't missing any expenses, because then you're going to pay more tax than you realistically should be paying. So if you're using something like a TurboTax or something to do your own personal tax returns, I can appreciate, of course, that sometimes that's what's required, because the money just isn't there. And but just make sure that you are not costing yourself money, because you're not properly recording your expenses against your revenue.
Perfect, thank you. Any other questions?
If anyone, I will throw it out there. I'm happy for you to share my email address, Caitlin, if you'd like
Okay.
to after. And if anyone, I know not everyone's comfortable in a big group asking questions, but if anyone wants to ask me anything directly or talk more or ask me a question about something I said, I'm happy to do that.
Yeah, sounds good. Thank you. You had mentioned too in terms of like keeping a log for the vehicle purposes. And I know I feel like there was a previous presentation that Baker Tilly delivered. And I know Excel was a simple way to do it. Is there any other do you know of any other applications as well that could be used?
Well, I think like there's so there's different levels of like a QuickBooks Online or a Xero, and there's some pretty base level applications that you can use that don't have a lot of the bells and whistles, but have the basic record keeping. So I would say I think that I think that sorry, I just got distracted by the question.
No, that's okay.
I think that like something basic like that is probably, I don't know if there's any other ones. I'm sure there is.
Right.
Yeah.
Good to know. And I think it also goes to show too, right? It doesn't have to be like you mentioned too. You don't have to always be paying for the QuickBooks of the world or the all of the applications out there. If your business is simple enough and Excel works for you, as long as
Yes,
you keep it organized and keep your costs low.
exactly.
There is a
Okay, there
message in
is
the
a
chat.
question. Okay.
Yeah,
Should we add monthly bank fee charges as an expense? Yes. So if it's your business bank account, then yes, those bank fees are deductible. And what place you are going to go? I'm not sure what you mean by online services to file your taxes. Like there's tools like TurboTax and those kind of things that you could use to file your basic taxes. Um, I'm not sure if that's what you mean, extraordinary weddings, extraordinary weddings.
maybe while we wait for them to clarify, there was another question that came through too, and it says, "Hi Melissa, can we claim ITC from before registering for
You need to
GST?"
register. You need to be registered. Yes. Oh, there is a comment. Hold on. Okay, she said yes. So like you can, if you want to do it yourself, then I think you'd have to look for some sort of like a TurboTax type of thing. Or you would need to go to an accounting firm, a bookkeeping firm, to be able to help if you wanted to use someone to do your taxes.
Perfect.
I think that I don't see any other
Yeah,
one.
no, none so far. Any other questions before we wrap it up?
Please feel free to reach out if anything crosses your mind. I'm happy to chat further. Are you good, Caitlin? I don't see anything.
Yes, I just see someone type in, so I just wanted to,
Oh, okay.
just in case, but if not, then yeah,
Oh, I think it was Jose. You're very welcome, Jose.
someone else type in.
Oh, someone's still typing.
Yeah.
Oh, okay. Can I go over the home office deductions? Sure. So, um, like the way it works or what you can actually deduct. Oh, it's so hard that they don't have their mics on. It feels like so inefficient.
I know. So they said
Okay, so
yes to
so
both.
I'll go over again how it works. So if you use 10% of your home to operate your business out of, then think
Mm.
about it as that you can claim 10% of your operating expenses of your home. So things like electricity, heat, water, rent, internet, repairs and maintenance, um, insurance, property taxes. Those are the kind of things. If you also were to do work, like let's say you renovated your office or bought office equipment, that would also all be deductible. So it's pro rata. It's obviously not your entire hydro bill because you use some of that personally. So the way we typically do it is based on a square footage model. I hope that answered your question. If it doesn't, you can put another question in the chat. And then I think there's another
And
one.
yeah, and the one came through. If I'm making thirty
Yeah,
thousand
I
dollars,
got it.
can you see that one?
Yeah,
Yep.
I see it. Yeah. Okay, so there's there's really no threshold like that. But when it's time to incorporate, there's like the high level things are, is there any, is your business risky where you want to have a distinct separation from your personal life and this business? So that's question one. And that's a question that you and your accountant and lawyer can discuss. The next is, do you have any debt that you want to protect from yourself personally and your personal assets? If not, it's how much money is your business making and how much money are you spending personally? So let's use your example. Let's use your example here. If you make $30,000 as a sole proprietor and you spend $30,000 to pay rent and put food on your family's table, all of that, then there's really no benefit to incorporating. Like I said, unless there's another non-financial reason, risk, etc. But it really depends on how much your business is making, and not revenue, but actually net profit after you pay all your expenses and after you pay your taxes. How much money is that business making and how much you need to live off of? So a better example is my sole proprietorship makes $300,000 and I only need $100,000 to live. So that extra $200,000, you're paying tax on your personal tax return this year at 50, 48%, depending on your bracket. And in a corporation, you could pay 12.5% and then leave that money in a corporation, invest it, and have it work for you. But if you're going to turn around and spend all that money, incorporation might not be the right answer. Okay, so hopefully I answered that one. Extraordinary Weddings said, so for an example, if you use 25% of your home to operate your business and you claim 25%. Exactly. It's a pro rata claim depending on how much you use. No problem. I love the questions. That's my favorite part. So if anyone has any other, please don't be shy. All right. Nothing else, I don't think.
I muted. We can leave it there. Thank you so much, Melissa, as always, for everything and coming to join us today and share your expertise. It's
No
always greatly
problem.
appreciated. Um, and as mentioned, we will be sending a follow-up email, which will include Melissa's contact information if anyone would like to reach out. But thank you, everyone, today, and we will see you next time.